Hello guys, today we'll analyze the stock of Century Plyboards India. So some of the products of Century Ply include the plywood, laminates, veneers, doors, MDF and particle board, PVC board, fiber cement boards and planks, face veneers, and exterior grade laminates. Company has international operations in various countries, including countries in North America, Europe, and many countries in Asia. The company has a very good management team, and in the board of directors, they have Mr. Sanjay Agarwal and Mr. Sajjan Bhajanka as well, who were the early pioneers of the company who started the company. Before discussing about the fundamentals of the stock, let us know more about the company. So Century Ply is the largest player of plywood in India and it has 25% market share. But still Indian plywood industry is dominated by unorganized player and their share is 70% of the total market. So we can see here that Century Ply has such a huge market to grow. If we have a look at the revenue breakup, then 53% of the revenue comes from plywood sales, followed by 21% in laminates. MDF contributes to 15% and particle boards to 4%. Company has wide distribution network. They have 2100 dealers who serve more than 25,000 retail points which are located across 630 cities in the country. The current price of the stock is around 415 rupees and the market cap of the company is above 9,000 crores. The face value is rupees 1 and it has generated 159% returns in the last 1 year. When we have a look at the PE ratio of the stock, it is around 39, but the industry PE is 23. So we can see here that P ratio of the stock is quite at a premium than the industry. The return on capital employed is 20% and return on equity is 16%. So both these return ratios are quite decent. The debt to equity ratio is just 0.13. So yes, company doesn't have a huge debt burden. Having a look at the past earnings, then we can see that in the last 5 years, company has not been able to grow their earnings, but even industry has only grown by 2.7 percentage. So this is due to the fact that company belongs in the infrastructure segment and this infrastructure space have cycles. So when there is a good cycle, when there is lot of economic activities, there is good construction, there will be demands of the product and company will have good earnings and so will the industry. But a positive thing we can see here that in the last 1 year, company has been able to grow their net income by 136 percentage, which is far more than the industry. Guys, just say industry is only 8% and company is 136%. So this is a huge improvement. Having a look at financial position in the short term, company has more assets than the liabilities and even in the long term company has a lot more assets than the liabilities. So yes, company has very strong financial position, another positive for the company. The debt to equity ratio percentage is even lower. It is 10.8 percentage as of current. This red line is the debt part and we can see here that it is going downwards. Whereas this green line is the cash available with the company and it is more than the debt as of now. Again, one more positive for the company. When we have a look at their quarterly results, we can see that sales of the company are improving quarter by quarter. Even the operating profit margins have improved. Just see it was 11% in September 2018 and now they are 17%. Although in June quarter they have decreased, even the sales have decreased in June quarter due to the impact of second wave of COVID-19. Even the EPS of the share has improved in the recent quarter. Now, when we see on a yearly basis, we can see that net profits of the company has not improved in the last 5 years. As we were talking, we can see in 2016 they were 169, then 190, 163, 148, 151. But in the year FY21, they have improved and we can expect a good performance in the coming years. When we look at the balance sheet, we can see that company has sufficient reserves and the spending on fixed assets were increasing till the year 2019, although in 2020 and 2021 they have slightly reduced. Now, when we look at the shareholding pattern, promoters holding is around 73%. So such a high holding by the promoters proves that they have a lot of trust over the company and is another positive for the company. Foreign institutions have 5%, domestic institutional investors around 12% approx, and remaining public has 10%. So guys, this is the chart of Century Ply on a 1 month time frame. Now one thing which we can clearly see that this stock is cyclical in nature as it belongs in the infrastructure space. So if somebody wants to invest in such stock, it becomes vital to know whether the stock is in the bearish channel or the bullish channel. So guys, on a daily time frame, we can see that currently stock is in a bullish segment, although it is facing resistance between the level of 450 and 440. So this can be termed as the supply zone for the stock, but there is good support for the stock at the level of 380 also. So I think if somebody wants to buy this stock, this level of 380 can be a good level to accumulate this stock. But guys, remember to book profits in such stock from time to time, and you can place an SL below the level of 380 to book profits. So guys, this was all from this video. If you found the content helpful, then you can like the video and subscribe to this YouTube channel. In the comment section, you can let me know if I missed any important point about the company. Thank you.